it's a vocal community. There are a lot of opinions. People say Bitcoin is money for enemies. There's been skepticism in the Bitcoin community since before Bitcoin, right? One could argue that Bitcoin was born out of skepticism, right?
In a world built on fragile trust, Bitcoin was born out of skepticism, out of a refusal to believe that institutions could be the guardians of our wealth. Michael Saylor reminds us that the DNA of Bitcoin is rebellion. Don't trust. Verify. It's money for enemies, a system forged in doubt, designed for those who questioned everything. But Saylor warns that pure skepticism can become a trap. Civilization itself runs on selective trust. You trust the pilot who flies the plane, the doctor who holds the scalpel, the company that built your car. The question isn't whether to trust, it's whether you have the freedom to withdraw it. And that, he says, is Bitcoin's true power, optionality. Bitcoin doesn't demand loyalty, it grants choice. You can hold it yourself, entrust it to a custodian, or move it across borders in minutes. You can trust and untrust at will. It's the first form of money that lets you pivot between independence and cooperation without asking permission. That balance between freedom and trust is what Saylor calls the yin and yang of Bitcoin. He contrasts this with gold's tragic flaw. In the 1920s, nations like Germany and France technically owned gold, but their bars sat in vaults in London and New York. When German bankers once asked to see their reserves, the gold couldn't even be found. Gold had value but no accessibility. It demanded centralization to function, and that dependency became its downfall. Bitcoin fixes this. It transforms the ancient bearer asset into something anyone can truly hold. Even if only banks and governments used it, Saylor argues, the world would still be hundreds of times more decentralized than during the gold standard. But when millions of individuals self-custody, we enter an era of decentralization humanity has never experienced. In the end, Saylor's message is clear. Bitcoin isn't about rejecting trust, it's about reclaiming the power to give or take it away. It's the evolution of money into sovereignty, the silent revolution that lets each of us decide who or what is worthy of our faith.
And so it's deep in the ethos and the culture, the idea to question everything, slay your heroes, don't trust, verify. Right? So the whole idea of Bitcoin is, don't trust anybody, don't trust any institution. And so if you start asking the question, how do you create an economic protocol where you don't want to trust any of 8 billion people and any of 400 million companies and any government? That's an interesting question. I would say that skepticism has its place. It is motivational. But at some point, it can become, what is the word?
Counterproductive, maybe?
Counterproductive idealism, right? And the truth of the matter is, you do need to trust the company to create the airplane you fly in. You do need to trust the company that creates the car you drive in. You do need to trust the dentist at some point because you can't. And you do need to trust the doctor because you can't take your own appendix out, or at least it's very rare, right? And so at some point, you do have to trust something. And I would say, the more evolved way to look at Bitcoin is not that you want to embrace it and never trust anything. The real inspiration and the promise of Bitcoin is once you've embraced it, you have the option to extend and withdraw your trust, from time to time. And if you choose to not trust the government, you can relocate your Bitcoin to a different country. And if you choose to trust a custodian, you can locate your Bitcoin with them. And when you decide to stop trusting them, you can relocate your Bitcoin to any of 100,000 other entities. Or if you go through a period of life when you choose not to trust anyone, you can self-custody. And when you decide you don't trust yourself, you can transfer your custody to another family member, right? And change. So the real power of Bitcoin is optionality. And the reason we have the optionality is because the entire movement was born out of distrust. And so there is a yin and the yang, there is a dialectic here. And you need a healthy degree of skepticism and distrust and cynicism. But once you've created the technology, you're not going to reach your full potential unless you work with other human beings, right? And so ultimately, when you decide that you're going to work with other human beings, either as a trusted custodian or a trusted hardware device manufacturer or a trusted hardware wallet, or you work with another corporation that's a trusted team of people, whether they, work on your teeth or work on your heart or manufacture the food or provide you with the aircraft, travel you need. At that point, you can reach your full potential, and you do it empowered, with property rights and with economic rights. And the reason that you will be able to trust them is because you have the option to withdraw your trust. All right, so I look at it as the great deterrent. If you think about gold and why gold failed, one reason gold failed is it's so incredibly difficult to custody. And so if you look at in the history of gold, in the 1920s, you had 4 great central bankers, and the central banker in Germany was Schacht, and the central banker in the U.S. was Ben Strong. And the world, was substantially on a gold standard, and the Germans had gold. And the French had gold, and the British had gold, the Americans had gold. But for the most part, the gold was either in London or in New York. The French gold was with the British or the Americans, or the German gold was with the Americans. So there's a famous story where Schacht traveled to New York City, met with the head of the Fed, Ben Strong, and Ben Strong wanted to show him the German gold, took him down into the basement of the New York Fed, and they couldn't find the gold. And of course, the message of the story is this: gold is so difficult to custody, countries couldn't figure out how to, like the entire country of Germany couldn't figure out how to custody their own gold, much less the 100,000 companies in Germany or the 60 million people in Germany. And so the reason gold failed was it was too slow and too difficult to custody, and therefore your property rights were always going to be impaired by a central actor. And, imagine the entire world running on gold-based credit on a gold standard when all the gold in the world was sitting in London and New York City, and most of it was in New York City, and we can say, oh yeah, that's a bearer asset, but not really, because 40 million companies couldn't bear it. 400 million people couldn't bear it, right? And so Bitcoin, it represents the bearer instrument, but it really is practical for an individual to take custody, and it's practical for a company to take custody. And of course, I guess what I counsel to people that are idealists is they don't trust banks and they don't trust companies. But the point that I would make is, during the entire gold era, gold was so difficult to handle that no company could custody their gold, and no bank could. If we lived in a world where 40,000 banks were custodians of Bitcoin, you would have evolved from a world where there were like 8 or 6 custodians of Bitcoin custodians of gold in the entire world, right? And so I think that Bitcoin offers a promise of economic integrity, and I don't think we should rail against a bank embracing Bitcoin.
No.
The truth of the matter is, if every country on earth embraced Bitcoin and the countries became the custodians of Bitcoin, and the only thing we accomplished was to have 150 countries custody Bitcoin, that would be more decentralized than the gold standard for hundreds of years, right? It would be an order of magnitude more decentralized than we had under the gold standard. So what we're talking about is a world where if only banks and only governments custody Bitcoin, you would be 100x to 1,000x more decentralized. And if corporations in custody Bitcoin, you would be 10,000 times more decentralized. And of course, in a world where millions of individuals or tens or hundreds of millions of individuals self-custody, you're not like 1, 2, 3, 4 orders of magnitude more decentralized. You're like 6, 7, 8 more orders of magnitude more decentralized. So I tend to focus upon the fact that the worst case for the cynic is 1,000,000 times better than the best case we had 100 years ago, or even the best case we had ever,
Right.
in terms of decentralized monetary integrity.
One of the criticisms is, through a humanitarian lens, if corporations hold a large share of the Bitcoin, what does that mean for the average person? How do you, avoid crowding out small users?
When we got involved, Bitcoin was trading $9,000 a coin. And today, Bitcoin's $115,000 a coin. And it got that way because our company bought 3%. And BlackRock enabled institutions to buy like 4%. And that means that 93% of the gain, and that's 93% of nearly $2 trillion. So $1.8 trillion went to the individuals that owned the Bitcoin before the corporations got involved. So the individual's not been crowded out. The individual just, if you posit that individuals, were the ones that owned the Bitcoin in the year 2020, then those individuals made $1.8 trillion since the corporations got involved. So the corporations aren't crowding out the individuals. The corporations are making the individuals that believed in Bitcoin insanely wealthy. And now the individuals can decide what do they want to do with that economic power, right? And they'll do whatever. As a practical matter, it seems to me that for our company, if we were to ever get to 5% of the network's going to be at least $1 million a coin. If we were to go beyond it, it's going to 10 million a coin. So when we get to 7% of the network, if we do, and Bitcoin is $10 million a coin, and if BlackRock keeps up with us, that means 85% of the network, right? And you're going to be talking about $200 trillion. So you're going to have $170 trillion that will flow to the individuals. So they're not exactly getting crowded out, right? If anything, what you've got is the corporations are all engines turning the flywheel of the Bitcoin economy. Every single company, every Bitcoin treasury company that capitalizes on Bitcoin is like attaching a motor to the network. And every time that company buys $50 million worth of Bitcoin, they spin that drive shaft one turn. That's one day's natural supply, right? And so the more companies that come on, whether it's BlackRock or whether it's Strategy or whether it's MetaPlanet or whether it's 21 or whether it's BSTR, or whether it's similar, whoever it might be, each one of them is firing up a motor. All of the motors are powering up the network. If you're an individual and you believe in Bitcoin, you buy the Bitcoin, you cold storage the Bitcoin, and you let all the companies power up the network. If the companies didn't show up and the network was all individuals, Bitcoin would be trading $5,000 a coin.
No.
And here's the problem. It wouldn't just trade at $5,000 a coin, but the corporations, if they were to choose a different network to power up, if all the companies went to Bitcoin Cash or Litecoin or Ethereum or something else, Bitcoin would max out at 5,000 a coin and it would dwindle down to nothing because the companies would latch on to the next network, and then they would go to every government in China and Russia and Europe and South America and Africa and the US, and all the laws would be modified to benefit the other network and eventually squeeze the Bitcoin network out. So this is This is a protocol, and you could even say there's a protocol war, and it's a war to determine the future of money. And the war for the future of money is going to be fought and won with money.
And that brings us to the end of today's video. Michael Saylor's vision paints Bitcoin as a digital asset built for humanity's progress, a beacon of financial inclusion, and a guardian in today's shifting economic world. With institutions embracing it, Bitcoin has found its launchpad toward global relevance and strength. If this message brought you value, don't keep it to yourself. Share it with someone who needs to hear it. Subscribe for more insights, and until next time, stay curious, stay informed, and keep watching the future unfold.